Hey guys, so today, here's the plan. We are going to talk about adjusting journal entries. They are going to be a little bit more difficult, a little more tricky. That's why I've came up with an acronym that we'll go over and kind of help you remember the accounts that we need to do, and also help explain why we do adjusting journal entries, because this is one of the trickiest parts of that accounting, where it can get a little confusing. So let's do that now. So when we're doing adjusting journal entries, we need to kind of understand what they are and why we do them. So when you look at previous examples that we've been using it at months and year ends. Where in the real world, it's not really how it works, right? Payments and services don't necessarily line up at the beginning in every month. And therefore, we have to sometimes make adjustments in the journal entries when we put them down, because they do have to record it at the time that they take place, even though they may not end and finish at the same time. So we do adjusting journal entries at the end of the month or the year. So we need to make those appropriate so that it makes sense. Okay. And then keep in mind, the reason we're doing this is so that we can do those financial reports that we talked about. So they need to be done accurately and timely, so that they happen at the right time. And as a reminder as well, debits and credits, they need to be done in that order. So previous videos we talked about that debits are always done first and credits done second. Okay, so that's another thing that we need to keep in mind when we start going through some of the examples. So here's a little acronym that I came up with. So there are 5 types right here. And the little acronym that we came up is PUDA, or PUDA squared, right over here. There's two A's. So we're going to go through each of those today, examples of what each one is, and then in the next video, we'll do some applications of them. So we'll actually go through the examples, all right? And the very last thing we're going to do today is we're going to go over the 4 steps to kind of walk you through it. So if you write down the 4 steps, again, getting in a good habit so that when you go do the journal entries, everything runs smooth and you don't forget certain steps, okay? So let's start right now. So we've came up with the acronym PUDA squared. So the thing I've written down here is a good way to kind of help remember it. Okay, so please don't use accounting. It's a good little shortcut to kind of remember it. But anyways, try using that. It helps remember. So PUDA, please don't use accounting squared, and you'll be good to go. So let's look at what the P stands for. So prepaid expense is what the P stands for. And this is when we're looking at have we used anything up. So for example, if we have had prepaid rent or prepaid insurance, have we used any up? And if we have, then we need to record it. And then these are the accounts right here. So it would be, in this example here that I gave with the blanks, so it would be rent expense gets done first, right? Because it's a debit, right? Because they get done first. Debits first, credit second. And then the prepaid, if it was rent, would get the second one, the transaction recording that maybe takes place. All right. So debits first, credit second, right? So if it was insurance, it'd be insurance expense, and then prepaid insurance would be the second one on the when you're recording it on the journal entry. Okay. So let's look at an example. So here's the example. So of the $3,500 insurance paid in advance, right, prepaid, $500 has now been expired or used up, right? So this is what the transaction would look like. So $500 expense, okay, and prepaid $500 for the credit and insurance. So it'd be prepaid insurance and insurance expense, but the amount would be $500 because we used up the $500. All right. All right, let's move on to the next one. So for the D, we have depreciation. So depreciation, if you've heard that word before, is when things go down in value. So things that you own now go down in value. And that's what we need to look at, because if we had to sell the company, it's what it's worth, right? So we need to take that in consideration when we're creating our financial reports. So it's important to understand that also that is when it's done for the year. So if you're doing a monthly report, you need to divide it by 12. So just keep an eye when you're doing questions, if it's a month end report or a year end report, because if it's a month end report, you need to divide by 12. So let's look at the formula. So then you have costs, so what you actually paid for it. So let's use an example. Say you bought a car and you paid $1,000 for it. That's what you paid for it a year ago. minus the salvage life, so what it's worth today, right now as we speak. Let's say it's worth $500, keeping math simple. And then you divide it by the useful life. So how long do you plan on owning the vehicle? Do you plan on holding it 5 years? Then you can calculate it from there. A lot of times in an equation, these are given to you. And it's sometimes also the useful life. I mean, it's estimate, right? So how long do you plan? It's a kind of a bit of a guesstimate so that we can kind of figure out how long we're going to keep the vehicle. And then that way we can actually calculate the depreciation on that vehicle. So let's look at an example. So in this example here, we purchased a vehicle for $25,000, more realistic, and it will have a salvage life of 1,500, okay, and a useful life of 10 years. So that would give us a calculation of $2,350. All right, and that's for the year. Remember, if it was for the month, we'd have to divide that by 12. All right, so let's look at that further. So it depreciated $2,350. So these are the accounts that you would put. So it'd be a depreciation expense of $2,350, and it comes first because it's a debit account, right? So we got to make sure we do the debits first. And then the second one would be accumulate depreciation account, okay? And that would be because it's a credit. All right, let's move on. So let's look at the U. So the U stands for unearned revenue. And this happens when, again, remember we were talking earlier about time frames, how they don't jive up. When maybe you have a job, if you only completed part of the job. Remember unearned revenue, right? Where we've completed it, we've been paid, but we haven't completed the job. So think of it if it's a big job, like a renovation of the basement, it's not going to necessarily fall in that one period of the month end. So it would carry over. So we need to calculate at the month end, if we're doing the month end financial reports, how much we have earned. Okay, so it's only when we've completed part of a job and it's not recorded nor received yet. So the accounts we'd be using, so again, debits first, which is important, unearned revenue, which is the debit, and service revenue, which would be the credit. Okay, so let's look at an example. Okay, so in this example, of a $3,000 received in advance, so people pay, let's use in a basement, say someone paid us $3,000 to renovate a basement, we've completed $2,000 of it. So now we need to make that adjustment on our journal entry. So the accounts that we'd be using, again, making sure that we use debit first. So unearned revenue gets dealt with first, remember, because it's a liability. So the debit, right? So it's on the left-hand side. And then service revenue. So the service revenue would be $2,000 because we've earned that now. So now it actually becomes revenue because we've earned it, okay? And our liabilities have come down. All right, let's move on. So there are two types of accruals. It's what the A stands for, hence the A squared. So accruals, and there's two types. So there's accrued revenue and accrued expense. So let's look at those two now. Okay, so let's accrued revenue now. So this is by definition, so any job that we did, but we haven't recorded or invoiced it yet. We haven't done it. So let's use the example that we used for unearned revenue. Let's say we completed the basement, and it's come near the end of the month, but we just haven't invoiced it yet, or we haven't recorded it yet, right? So we need to record that because our reports have to be specific to the month's end or year end, right? So because they don't always necessarily jive. And that's what that's why we're doing this, right? Because they don't necessarily line up. So accrued revenue, your two accounts that you're going to be looking at is accounts receivable, right? People owe us money. So that's a debit, so it gets done first. And the second now is service revenue, and that's a credit, so that's second. Okay, so let's look at an example. So in this example, so services of $12,000 were completed, and let's use the example that we're doing the basement. Services of $12,000 were completed throughout the month, but we never got around to recording it yet or sending an invoice to the customer yet, so we need to record it yet because that's going to happen next week because we're at the end of the month already. So in that example here, so your two accounts receivable, and service revenue, and it'd be services of $12,000. Okay, so let's look on to the second A. So accrued expense is any expense we used, so we've used it, but we haven't been billed. So if we're the business, and say we used a bookkeeper, but they haven't billed us yet, but we still need to record, right? We need to estimate that we're going to get billed for it anyways, and it's going to fall into this period, so we need to record it somehow. Another example would be a toll highway, or the 407 if you live in Ontario, would fall into that category, right? You've used it for the month, you've used the 407 for the month, but you haven't been billed it. But we need to add that expense to this period, right? So this time frame. So that's why we need to do that. We need to record that to be accurate. Okay, so let's look at the two accounts. So it'd be an expense, and it gets done first because it's on the debit. And remember, if you get confused, which one gets first, if it's like accounts payable or in this sample, an expense, go back to Accrued, draw the charts, plus minuses, and pick the accounts. And we'll talk about that in the steps in a minute. But this is what we're looking at. So again, debits first, credit second. All right. So accounts payable, right? Because that's something paying sucks, so that's something we have to do. So we're gonna have to pay that bill once we get it. So it needs to go into accounts payable. All right. So let's look at some tips. Actually, first let's do an example and see what it looks like. So in this example, we have a telephone expense of $900 have been accrued. So for the month, we've used it. And both are unrecorded, so we haven't recorded yet, and unpaid, so we haven't paid it. We know the bill's going to show up in a few weeks, but it's going to be for this month, right? So in a couple weeks, which will fall in that period. So we need to record that. So again, it would be $900 telephone expense on the debit first, and accounts payable of $900 for the credit. All right. So now that we've gone through all of them, let's go through some 4 steps to hopefully make it easier as you go through the transactions. All right, so here are 4 steps. So let's go through this. And my helpful tip to you would also is to get used to writing these out, just like when we're doing general ledgers and everything else. When you have these steps written down, you get a habit of writing them down. It becomes easier and easier to the point where you don't have to write them down anymore. So always actually write them down, and then also write in the acronym PUDA squared. That'll help you remember the accounts that you're using. So it's a little bit of memorization. It's not a lot, but once you have them down pat, you can walk through the transactions quite well. But let's look at some steps that make it. So identify which of the adjustments fall under PUDA. So is it a prepaid? Is it depreciation? Is it unearned revenue? Is it any of the accruals? And the trick is it'll actually say it very specifically 90% of the time in the question. So you should be fine by identifying it. But the key, so when you see those adjustments, you need to write down which one of these, the PUDAs, it is. Okay, so that's step 1. Step 2 is write down the actual accounts. So is it accounts payable? Is it prepaid? All those, again, the hints are written in the questions or the adjustments, so it helps you determine. But again, write them down next to it so that you don't get mixed up. When if you try and brace it all in your head, at first it becomes very confusing. So write down the actual accounts that I just went through for PUDA squared. Okay. All right. Third is if there's any math needed. So if we need to add or subtract, if we're doing depreciation, do we need to divide by 12 because it's for the month end? Any math that may be needed needs to be completed. Okay, that's the next thing. And then the last but not least, fill it out. And the important part is remember debits versus credits. And if you're not sure when you remember the accounts that you get written down, go back to your Accrued, draw it out, debits first, and does it go up or does it go down? And those are some little tips. So slowly get used to it, and then you'll be fine. Okay. So that was a quick rundown. In the next video, we're going to this video right here. We will look at some examples and walk through some examples. So my suggestion now is practice memorizing, write down on your own what PUDA stands for and the accounts. So PUDA is squared, what it stands for, and the accounts that go with it. Okay, I would practice that now so that you get that habit, because when we start looking at the adjustments, you already have that habit. You can write it down for a test, and then you can reference it that way, and then start working your way through the steps. All right. So right now, practice writing down what PUDA stands for, PUDA squared, and the accounts. And then next video, this one here, we will go through some examples. All right. Good luck.